Frank, you mentioned to me on Friday, you're like, hey, look at the COT data. Now's our chance to share it with the world. What do we see on Friday's NFP data when it dropped? I'm sorry, NFP, COT data.
Yeah, so I like seeing this because COT's buying up the indices
Mhm.
and more risk favored pairs or assets, I mean. So we got not only US 30 and NAS, but we got uh, Aussie, Kiwi, CAD.
Mm.
Um, and then on the flip side, dollar is still selling, which is good to know. Oil's still selling, which is also good. Um, so I guess the only thing is S&P is kind of selling too, but I would say it's leaning more bullish than bearish. But I guess you could also argue it's mixed sentiment. But this is kind of the same thing as last week, so I'm glad it's continuing to be, further selling of the dollar and then further buying of the indices. So that's good. And then now we have three assets that are kind of strongly bullish for this week: the CAD, Kiwi, and Aussie dollar, which is good. Hopefully, we see more. Like we can see euro and pound get out of that neutral zone and more so into the long favor. But yeah, so that's kind of what's going on.
Yeah, I think that's a good point. And we talked a little bit about that. For those of you who missed our conversation last week, Frank and I were pointing out that one thing you can do with the COT data is you can look at like a summary of what the report is telling you. So like on my screen, I'll show this real quick. US 30, CAD, NASDAQ, Kiwi, Australian dollar, all of these, when collectively looked at, you can kind of see that, there's more risk on assets, as Frank pointed out, that are being bought. Meanwhile, some of the more risk off assets are being sold. So definitely a positive sentiment. Again, these are your professionals in the industry. Is this data a little bit delayed? Yes, but it still shows you kind of a consensus amongst the smarter traders in the room. So definitely useful. Frank, you've got a chart pulled up there. We'll go back to your side of things. You got gold pulled up. What are you thinking about this pullback?
So I guess I'm painfully bullish. I'm still in the long trade from last week,
Okay.
but price is just hanging out at this trend line, and I'm currently in drawdown, but I still have a long bias on it. Hopefully today will be some rejection and we'll get some more, I guess, support. Because if it breaks under this level, like say it closes under this trend line, we got a long way to go before I see another buying opportunity. So that's 1980s, I guess, 1970 to 1980s. And currently we're 23 points above 2000. So this is going to be if it doesn't hold here, I'm going to have to wait longer for another long entry. But from NFP last week, I was still kind of comfortable with the gold trade, because we talked about last week that either way, bad jobs numbers or bad economic numbers can arguably be good for gold, and in the same sense that good economic numbers can also be good for gold because of the Fed and the easing that we're hoping to get eventually,
Right.
from like rate cuts and stuff.
Yeah, I like the story too. I mean, I think that of the outlook for 2024, I think most scenarios favor a weaker dollar still, and it's off the back still of yields coming down. I mean, unless we see a huge tick in inflation and something changes in this story and the economy is way hotter than we think right now, for the most part, that leans towards cooling economy, weaker dollar, and that could be either recessionary or just simply a cool down the economy. Both of those scenarios could actually be positive for gold. So we'll watch that close. You got NASDAQ pulled up as well. What are you thinking on NAS?
Well, I was gonna say that chart looks exactly like UJ, which makes
Oh
sense.
yeah, it does.
I
Yeah,
thought you had UJ pulled up, but
they're
yeah, I'm
oddly
still in the NAS
correlated.
trade. The NAS trade's doing all right. Um,
Nice.
I don't have Discord up, but I got in somewhere around here. So looking good so far. bounced off that support level. I want it to come back up to 16,760. So hopefully that happens. But yeah, just right now I'm in gold and NAS.
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Very nice. And so I've just pulled up your Discord alert just for people to see the alert that you sent. So taking along on NAS after news, took price to 200 SMA on the 4-hour time frame. Index is now at a +7 for the edge finder. Yeah, that's a heck of a trade, Frank. If that is in fact if indices are finding a low here, that could be a very nice risk to reward trade on the NASDAQ. I've got S&P so far. Look at that NASDAQ though. That NASDAQ is definitely outperforming on the day, up 0.75% compared to my measly 0.19 on the S&P. But to be clear, Frank, we talked about this on Friday, I barely survived my trade. I think you were in the same boat, right? We almost got stopped out on that move down on Friday.
Yeah, I got close.
Yeah, it was a tough call there. Also, Frank, not random, but what a move from oil here today, almost 5% down. That's such a crazy sell-off. Do you know anything that's going on that would cause that?
No. But I do have an idea.
Oh,
I have an idea.
Okay.
It's a technical idea. So despite whatever's going on, which I don't really know for sure. Wait, tab repository. Okay, never mind. The idea was this though. Let me zoom out some, I guess. So you see like several weeks of just sitting in like a certain spot before you get like a couple points of rejection, and then followed by months of upside, which is kind of like this too. So you have some rejection here followed by a couple weeks of upside. I'm thinking that you stay in between 67 and I guess 76 price wise, and you're comfortable with the price swinging in between these two levels. I think that, if you get rejection this week, today's really bad, but you can get maybe some rejection later on this week or later today, and be comfortable with having price swing in this area, because if it's followed by upside, I feel like you'll be getting like at least a month of this just going up. So that was very poorly explained, but I was looking at
no, I see
just
what you're
what
saying.
I've been doing in the past.
And I think we had somebody in the chat contribute this also. So Saudi Arabia slashed prices on oil. I think that's contributed to the sale. I pulled up an article on that as well. That does seem to be the case. Basically quoting that there's softening demand outlook. And so they still, that's one of the things, if you're an oil producing country and demand is, OPEC has these ideas where they kind of like want to band together to keep prices at a certain level, but we've seen some of them falling off the wagon, going against the grain there. And now we see Saudi Arabia, which is of course one of the big ones, right? And so if they're saying, hey, we're going to lower prices, clearly, demand outlook is a little wavering. And so that naturally brings the price of oil down. So very, very big move there. And, the way it actually interacts with other markets is very important too. Like I said, I think that can continue to fuel the inflation story. So that thing that we discussed earlier about, the kind of tail risk of if inflation spikes higher, then suddenly you get the strong dollar back in and gold drops tremendously. Well, cooling inflationary numbers can be helped by oil dropping by 4.7%. If you're wondering why, if you're newer in the audience, you wonder what that means. Frank and I often point this out, but lower costs in oil means that all of us are going to pay less at the pumps, and that means more extra spending money for the average consumer that can then go spend it with stocks or with businesses, and of course their stocks can do well in that environment. And again, and the inflationary price raises will likely sort of fizzle, and that will continue to help the story for a weaker dollar, but we'll have to see.
The thing that is important to note is the US election by the end of the year. What happened in 2020 was that it went flat from around August Forex wise until the election. That also meant that January, February was very great for stocks in January, February that year or earlier. So it seems like all the pricing of all the profits is being made now. That's why it's going so high. And then we will go into some kind of range depending on who is going to win. I'm just pulling up the reason for why oil is falling. You're like, hey, Frank, I'm putting you on the spot. I'm like, you should put me on the spot because Well,
that's why you're here, Ivan. You're the man with the plan and the answers. So what do we got? So it's Saudi Arabia related. Oil takes a beating after Saudi Arabia lowers light prices to 27-month low. Wow.
So it's okay. I didn't see that one coming, to be honest, but it is what it is. So I was also wondering about this S&P 500 low. I haven't seen you trading it. Maybe I'm blind, but right now it seems to me a bit more interesting of a reversal.
Yeah, I picked it up long and barely stayed in the trade. I am in the trade right now, so I picked it up long last week.
Okay. So maybe I'm just late to the party then. So it's just me then.
Are you trading it too?
No, not yet. That's why I'm saying late to the party.
Gotcha.
So this is interesting. This is a great environment I want to be in. I want to see Fed cutting interest rates, though NFP on Friday wasn't necessarily the best outcome possible, but it is okay. It is what I want to see because I've previously said I talked a lot about trading conditions you want to be in, and now the stars starts to align against with dollar bearishness and S&P 500 and Nasdaq bullishness. So for me, it's just a new high pullback, and I'm good to go.
Yep. No, and to kind of elaborate on the NFP Friday, we didn't get a chance to chat about that yet. The jobs numbers, they weren't. I think I kind of took it as it wasn't bad, right? Because it wasn't too hot. There were some revisions of October's numbers, so they revised down as they've been doing for like the last 15 NFPs. But we saw overall, we're seeing cooling in labor market, but not absolute destruction of the labor market, which, if you and I are talking about S&P bullishness, that's kind of what we wanted to see. You also saw PMIs, which actually gave the market a nice boost. I don't know if you saw that services PMI number was like Goldilocks. It wasn't too hot, but it was a slowing in the economy. Still growth, but less growth. And that is exactly what the market wanted. So I actually think that Friday's round of data was helpful. Now, initially, there was a little bit of freak out, right? Wage growth was stronger than expected, and so the stock market sold off a little bit. Dollar index rocketed and then kind of came back. And dollar index as we stand. What do you think about currency pairs right now, Ivan? Is the dollar, going lower? Is it going higher? What do you think?
Yes, good question. The answer is unlimited bottom. You asked Frank, where is it going? I think dollar's going to continue falling. To where, to when? It all depends on when the end of the monetary policy is going to be. If CPI continues to fall on Thursday, if it continues to be around less than 3% inflation year over year, that'd be great. Then this one should continue lower. The seasonality of it is bullish for January, so I don't like that. So it's a bit of a mix in my head. I don't know where to go at the moment. But if this one breaks 102, I think this is continue lower. I think euro dollar, Aussie dollar, pound dollar, New Zealand dollar currently has like a pullback to a greater push higher. The only question is, are we going to break higher on euro dollar, on pound dollar by the end of the month? I am not so sure, but I'm just going to take one side and say dollar bearishness at some point going forward.
I think that's just fine in my opinion, because I made this point last week a lot, Ivan, that there was a period of time here where it was like dollar bearishness was so in consensus that I was a little bit worried. And I think you feel this way too. Like when something kind of reaches a monthly pivot for you, or it's like becoming extended, it's just a time to like back off a little bit and just say, look, sentiment is getting too one-sided. One side of the bench is getting too heavy, and let's wait for it to kind of normalize. I think that it's reasonable to say we've had a bit of a pullback on the dollar. Jobs numbers didn't change anything to the narrative, like you just said. You simplified it very well, right? The dollar's in a downtrend. The interest rates are coming down, and so when you have this pullback, I think it may seem almost too simple, but perhaps that's all you need, is just to say, well, it's in a downtrend. Interest rates and inflation are cooling. Nothing has changed to the narrative. Path of least resistance, the way I like to say it is, path of least resistance is down here. So unless something changes, I think another way of saying that is that the burden right now, I would say, is on the bulls to prove something, and the bears kind of have the upper hand until something changes. Maybe you get hot CPI numbers on Thursday, and then Ivan, we're both looking at this differently. But for now, inflation's cooling. We'll take a look and kind of stay in that camp unless something causes us to adjust and be reactive to it. Would you agree? Is that fair? Like, is it almost that simple?
Well, we'll both look at Thursday and Friday for CPI and PPI. I see it as does it have more than 0.2% deviation from the expectations, which expectation is 3.1, I think 2.2. Sorry, last was 3.1. So if it comes around 3, that is continuation lower. If it comes up at 3.2, 3.3, 3.4, oh, we have a pause. And that's gonna make some waves in the market. And then we have, if FOMC is around 30th of January or something, so we still have another 2 weeks, give or take, of trading before FOMC. So to me, yeah, I just need the confirmation of a lower than expected CPI, and I'm good to go lower. And is that the best way and the only way? I don't know. I feel like I'm trying to do the short-term, long-term kind of situation. I wait now because it's not bearish. And then hopefully that's going to lead me to the long-term success I'm hoping for.
Yeah, well, I think I've kind of gone ahead and moved in on my dollar side things. I am long euro dollar. I've got it pulled up here on my end. I am long EU. Price came down here, and I liked the way it held this level. I joined it a little bit late. I didn't catch the lows, but I did enter this on Friday, and we'll see where that one goes. But again, I kind of like the way we set that up, Ivan, because if you think about it, CPI and PPI could take me out of this trade. And if that happens, it's justified. Like if CPI and PPI come out hotter than expected, I should get out of this trade. Like it killed my idea. Whereas if we had jobs numbers that I think were just fine, the dollar still, as we said, the narrative still seems bearish. I want to be in this trade unless something changes and gets me out for what relatively could be a small risk, because if we have, again, this week, we trend higher during the week and then CPI and PPI kind of confirm the bias that we're talking about, we very well could see the euro come back and retest this 1.11 level. So we'll see, but I am long. We'll see how that goes this week. And one area that I've just been still struggling with, you put me on the spot one time, Ivan, I've still been incorrect with my gold ideas. I took one loss trying to catch a buy trade, and now I'm watching to see for some sort of reversal. What do you think about gold? Right now, I find it too bearish for now, but I'm watching it close. What do you think?
How do I put it? There is a discount, but the discount is not free. if that makes sense. I wanted to around 2000 or 1980, like back down to a much deeper level. I feel like right now it's quite in the middle. So I like the uptrend. It's seasonal. It's supposed to continue higher. It's just short term a new low. So that I don't like. So what is the markets I'm looking for? I'm looking for basically higher lows, like this kind of market, and not necessarily that kind of market. So I try to avoid this and try to wait for it to turn around again. If that makes sense.
No, I agree. I would like to see gold show me something, show me some strength before I get tempted back into another attempt on the long side. But it's been I've only taken one loss on it, but you know, I'm willing to have my heart broken again if it at least shows me some strength first. You know what I mean? It's kind of like if it's like in a relationship. If you show me, you know, that you're willing to put in the work, I'll meet you halfway. But you know,
don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.